Once again, geopolitics and fertilizer markets are colliding. Unrest in Iran has traders on edge. Potash pricing is drawing interest in North America, and India's latest urea tender has come up short again. I'm Johanna Botta, and joining us today to break it all down for us is Josh Linville, VP of Fertilizer at StoneX. Welcome, Josh, and a huge congratulations on your recent marathon and 10K and 5K and half marathon and everything you ran last week.
Yeah. So he just got back from Disney a couple nights ago. So we went down there and Expos on Wednesday, and we ended up doing a 5K, a 10K, a half marathon, and a full marathon on consecutive days. So they call it the Dopey Challenge because everything is Disney themed, and this is the 13th year running. And I think that our little group that's ran every one of them, I think we're below 300 people left. It was a tough weekend, but we got through it. We lived to fight another day.
Well, while you were running around Disney, let's start with the latest headlines because they're huge. Is the urea market right to be nervous about the situation in Iran right now?
Absolutely. And that's the thing. You try and take a week off from work and it never really lets that grip go of you. There's always something going on. So, yeah, this uprising that we're seeing by the Iranian people, obviously that's catching national attention and for good reason. This is something that needs to be watched very, very closely. It seems like the current leaders are in jeopardy of losing that power. And there needs to be a little bit of a question. Well, what does this mean for global nitrogen? A lot of the market is focused on urea. Iran is the third largest urea exporter in the world. And I think that number is somewhere around 4.5 million tons per year. So if we get to a situation where this devolves into a massive civil war, and that creates a situation where, let's just say, energy goes down, production of nitrogen goes down, that's going to leave a major hole. Now, some people may look at it and say, it's Iran. I can't buy from Iran. They're one of the more sanctioned countries in the world. It doesn't matter. As long as those tons flow to the world, that adds to the overall S&D, whether it goes to you directly or indirectly. So we need to watch for that. The other side of the coin is anhydrous. I believe
Yeah.
Iran is either the seventh or eighth largest exporter of anhydrous in the world. So if all that starts to go down, all of a sudden their production goes down, that's also going to have an impact on that side. So yes, the world is very right to watch it. I find it very interesting that the world of urea is willing to pounce on these bullish watch points, but still continues to kind of largely ignore the major bearish points that have actually happened. We're looking at prices today about 20% higher than the same time last year, even though global S&D still looks better. We look at China, we still think they're going to finish 2025 5 million tons exported, which is back to normal for them. Supplies around the world still seem sufficient, but prices are up. The world is reacting to emotional and it's kind of ignoring the fundamentals. It's an interesting market right now.
Okay. Well, let's shift away from geopolitics for a second. Let's talk potash, which is showing more stability by comparison. Do the newly announced North American potash winter fill programs signal attractive value, especially given where crop prices were at the time?
Yes, and it's important to note where those prices came out. These prices came out before the USDA submitted their values. So when we saw these prices come out, they were good. I would dare say they were great. When you look at that ratio between those values, it's right in line with what we would consider that normal range. It wasn't exceptionally high, it wasn't exceptionally low. It's just kind of right where it needs to be, which is where it's been maintaining itself. It is one that our recommendation has been jump on it. It's a good opportunity. Potash, we don't see it being a situation where prices need to skyrocket unless there's some outlandish thing that happens around the world, but we also don't see a reason why it needs to fall to the floor anytime soon either. I would say we still have kind of a bearish temp. That's probably something we look at more towards like the May, June, July timeframe. But for this winter fill, as we prepare for the spring season, I thought it was a great program. The potash manufacturers, from my point of view, continue to do a great job to keep its product stable and in the money for the buyer and for the seller.
All right. And one last thing before we let you go, Josh. India's urea tender came up short again. What do you think that says about pricing, availability, or demand right now?
Very, very interesting tender to see. So they came out originally, they said, we're looking for 1.5 million ton. I believe they got around 3.5 million ton offered. And the very thing that stood out to me was the price differential. Normally, we see a wide price spread between the lowest price and the highest price on both coasts. This time, all but about 150,000 tons was offered within $20 at the lowest price of each coast. It looked, I mean, between the 3.5 million tons offered and that narrow price gap, We thought it looked like they're going to get that
Hmm.
1.5 and get it pretty easily. And frankly, the beginning steps, it looked to be that way. India only went to the first few offers and counterbid and said, "Do you want to participate?" Got to the end of it, they only locked up 1 million ton of that 1.5 million ton goal. And it was not on their terms. It was the offers turning them down. This is another example of this India approach. They're kind of being worked against. I think the manufacturers and the traders are looking at it and saying, "Oh, if these other people said no, I'm also going to say no."
Right.
And I think they're going to come back to the marketplace and I can offer a higher price at a wider margin on that next one. We've continually seen this. I know India has tried to get longer term, bigger volume contracts in order to move away from this approach, but they haven't had a lot of success there either. The supply side of the world continues to take advantage of how India is stepping into the marketplace.
That's right. Josh, thank you again for joining us. And thank you so much for letting us in on your private life. Congratulations again on all your runs. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.